Well, good morning, traders and investors. Roger Scott here, senior strategist of Wealth Press. It's Monday, April 3rd. I was going to do a practical joke on you on April Fool's, but it happened to be a weekend. I like when April Fool's is during the week. I remember Google playing with people and saying that they invented an app that could do a smell detector. That was so funny. It was several years ago. It's about 7:46 in the morning. The market's going to gear up to open up in about an hour and 44 minutes to be exact. I think I'm right there. My math could be a little wrong. Lots to talk about today. So Nasdaq, as you can see here, Nasdaq is down about 90 points, which is substantial. That's not random, and the Dow's up 122 points, and we'll talk about why. But the biggest factor for that, especially the Dow, is we're seeing a bounce on the financial sector, which doesn't seem to be in major danger at this time. Now, I want to warn investors about something really important, and that's semiconductors, and more importantly, the XLK sector. Now, right now, you're seeing how this sector is running away, and it's grossly overbought. Matter of fact, it is so overbought right now that RSI is like at 75, and that's let's see, that's a 10-day RSI. If I go to the 5-day RSI, it's about as overbought could be. It's probably the most overbought it's been in a while. Now, the reason that technology is running away like this, and I'm telling you, this is a big threat, not an opportunity here. The biggest reason technology is running away is because a lot of investors believe, in my opinion, falsely, that the Fed is going to pivot. I'm telling you right now, and as we get into analysis, there's a lot more to go before the Fed pivots. We're not there yet. Also, what's really worrying me is, remember something. The small caps are supposed to be leading out of a bull market. They started lagging again. So that's a big red flag. So you got to keep your eye on the Russell 2000 this week. You got to keep your eye on technology this week because it may turn on you. It may turn on us. Some blue chips may start moving higher. And you got to keep your eye on the bond market because the bond market is still creating this descending channel. And I still believe that it's going to fill this gap to the downside, which will put more pressure on technology and cause this to go down in interest rates. Because remember, there's an inverse relationship between technology and the bond market, especially the long bonds. So be really cautious. Now, as far as what we have on the table this week, OPEC came around and said, we're going to make a major cut. And that's causing the price of energies to go up substantially. Matter of fact, let's see what XLE is doing right now. I think energies are up, about 4 or 5%. Look at that. So energies are moving higher. And if you think this was a shock, it's not. And remember, higher energy prices are a ingredient towards inflationary pressure, not deflation. So something else we got to pay attention to. Now, as far as this week is concerned, you got manufacturing numbers today, ISM manufacturing, construction spending, factory orders, a lot of manufacturing and employment data. You've got ADP, which is going to reflect on Friday's employment situation, the biggest report of the week. Then you got international trades and goods and services, and then you got the petroleum status report. And the petroleum status report, it's based on what I'm seeing right now, this is going to be a no-brainer. Also, jobless claims. I'm trying to give you some sense of peace because jobless claims, it's been around 200,000, 190,000 now for a year. Don't let it fool you. Now, the big news is you got Bullard speaking, and then you got Loretta Mester speaking. That's going to be important. Now, let me tie everything together and put a bow tie for you as we get into technicals. But first, I want to go through the news. So, S&P futures are down this morning after three major benchmarks rallied on Friday as a sign of cooling inflation, bolstered hopes that the Fed may be close to ending its rate cycle. Folks, I just don't think we're there. And that's what the Fed is telling us too. Don't get your hopes up too fast. I mean, it's going to happen, but not this fast. Over the weekend, OPEC announced that they would cut production by around 1.16 million barrels per day through the end of 2023. That's a nice big juicy boost for energy prices. In a surprise move, United States called inadvisable. Well, yeah, of course it's inadvisable. They're, U.S. and OPEC. On the ground of this, oil prices surged by more than 5%. We talked about that this morning, brewing some concerns over a potential resurgence in inflation over the coming months. Remember, energy prices rise during inflationary pressure, and I'm telling you, we're still there. I'd love to tell you we're not, but we are. Now, Wall Street major indices ended sharply higher, with the S&P rising to a 6-week high. The the Dow climbing to a 3.5-month high, and the Nasdaq 100 notching a 7.5-month high. Data on Friday showed that U.S. core PCE price index, Fed's preferred gauge of inflation, stood at 0.3% and 4.6% year over year, lower than the forecast, strengthening the case for the U.S. central banks to consider ending its rate hiking campaign. But Boston Fed President Susan Collins said Friday, the latest inflation data doesn't change the Fed's monetary policy path yet. We still have more work to do and more to see to know that inflation is really on a sustained downward path. It's still too early, folks. And it's still too early here. It's only 7:51 in the morning. Also, New York Fed President John Williams acknowledged that Friday that inflation has moderated, but said there's more work to do to bring it down. Meanwhile, U.S. futures prices are at 56% of a 25% basis point rate hike and 43% of no hike. I think this number is going to increase substantially over the next couple of weeks. I think this is going to go up to about 75%, and this is going to go up to about 25%. In the coming week, and I mentioned this earlier, but I wanted to kind of show you, now I'm going to tell you, you got non-farm payroll report for March will be the main highlight. That's coming out on Friday as investors look for fresh update on the health of the labor market. Also, market participants will be eyeing U.S. factory orders, JOLTS, job openings, ADP non-farm employment change, that's the private non-farm payroll report, exports, imports, trade balances, S&P Global Composite, service PMI, ISM non-manufacturing, a lot of data, jobless claims, and unemployment rate. In addition, several Fed officials will be making appearances this week, including Loretta Mesters and Bullard and Lisa Cook. I forgot about Lisa Cook. Today, we're looking at U.S. ISM manufacturing PMI. It's coming out in a couple hours, and they're looking at the number to be at 47.5 compared to 47.7. Now, in Europe, futures are up or up a little bit this morning as market participants digested a slew of regional manufacturing activity. Also, European oil heavyweight jumped on Monday after surprise production cut by OPEC and its allied lifted crude oil prices. China closed higher after a private survey showed prices of a new home in 100 Chinese cities rose to the fastest pace in 9 months in March. A separate survey showed Chinese new home sales in 14 surveyed cities rose 55.7% compared to a growth of 31.9%. Now, according to data from the China Index Activity, at the same time, a private sector survey showed on Monday that China factory activity growth stalled in March amid slowing production. So their housing is looking really good, but their production is not looking all that great. It looks like they're having or starting to have a slower start than we thought. Nikkei closed higher after data showed the deterioration of the country's manufacturing sector eased slightly in March. Now, pre-market, MRO, Devon Energy, Oxy, all of these stocks are up over 4%. I told you not to give up on the energy sector. Tesla fell pre-market after the company announced it delivered 422,000 electric vehicles, missing expectations of 432,000. I mean, really, it's not that big of a deal. UBS Group dropped more than 3% after the Swiss Daily reported that banking giant is poised to reduce its workforce by 20 to 30% after the Credit Suisse takeover. That actually makes a lot of sense. As far as earnings, nothing really to talk about. Now, let's talk a little bit about technicals. Now, as far as technicals, financials are starting to look good. And let me show you something else. They are finally starting to come up here. Look at this ascending triangle we're building right here. It looks to me like they want to break out higher. I'm bullish on the financial sector. I'll have to see how seasonality is. And by the way, speaking of seasonality, it's a little wonky. It's not as good as it was last week. It's actually neutral. It looked to me, and again, seasonality is not 100%, but it looked to me like there was a big move between Friday and Monday today, and then the rest of the week is just kind of So I'm thinking the market may fold after today. We may have another good day today, and then the markets may start declining. We're really overbought, especially on technology. I mean, folks, this is way too much too soon. I know a lot of you want the market to be bullish. I know a lot of you want the market to forget about this interest rate hike, but these interest rate hikes that we're having, and we want inflation to come down, but small caps are not cooperating. Small caps is going to be the first sector. Kathy is going to be the first one to get us out of there. And for now, look at that. We're just not moving in that direction just yet. This is a rally in a few large cap stocks, large caps like Apple, which is distorting the market into thinking that that we're going to break out higher, but it's just a couple of stocks. So be really, really cautious. Matter of fact, as I mentioned last week, look at the sectors that are related to energy. Communication can't make a new high. Technology made a new high. Consumer discretionary can't. So if these come down right now, it'll just look like a fading rally to a downtrend. So we've got to be really, really cautious. Now, I'm not as cautious with basic materials. Consumer staples are finally breaking out. Let me show you this. Don't get into tech stocks right now. Look at that. Look at that breakout above that resistance level right here. And I mentioned something to you a while back. Look at the number of stocks in the consumer staples, 70 and 61. And it's moving higher, but you got to be really cautious. Energy right now is a low-hanging fruit. Financials a low-hanging fruit. Basic materials is a low-hanging fruit. And real estate's a low-hanging fruit. I also like utilities. Let's take a quick look at utilities. I think utilities is starting to come up as well. Where's my utilities? Who moved my cheese? There it is. Utilities looks like it's coming up. A lot of these stocks like financial, real estate, and utilities are at very, very critical resistance level. So you got to be careful. Utilities have been going up for several days straight. They had a very bullish seasonality last week. This week, not so much. I think materials and a couple others, I'll do a review tomorrow, but this week, there's just, beginning of this week, the seasonality is just not that great as the week continues. It starts off with a bang, and then it goes with a bust. So be really, really cautious. Keep your eye on financials. I think financials can really move if there's no nasty news. I think energy is going to give us a nice run for its money. Utilities could continue moving higher because of energy prices. And I think healthcare is going to start coming back up too. I still love consumer staples. I'm bullish on this sector, but I'm getting kind of cooling off on the tech sector. That's kind of my roadmap for this week. Now, before I let you go, folks, there's a simple metric one man uses to become, or he used it to become the richest person in the world. And this is one man, isn't Bill Gates, Jeff Bezos, or Warren Buffett. He's somebody you've probably never heard of. And at 2 p.m. today, a former institutional consultant and Wall Street analyst, Garrett Baldwin, Garrett is right on the money. He's holding a live class to reveal all the details about this man and the metrics he used. It's a metric that's easy to understand and one that anyone can use on stocks today. This is really cool. And let me tell you, Garrett is red hot. This guy is no monkey business kind of guy. Click the link below. Sign up for Garrett's free class. It's happening at 2 p.m. Find out how one man used this tactic that Garrett's going to share with you to become the richest person in the world. I want to know about this. I can't wait to hear that. Follow the link, and remember, like this channel if you're watching on the YouTube Wealth Press channel. Subscribe to my Telegram channel where I give you some free trades once in a while. It'll be a secret between us. Post pictures of my cats and my family. Notice I said cats first. And make sure you review and post questions in the YouTube channel. I will respond to them. You guys have a great week ahead, and I'll talk to you soon. Bye.